I want to introduce the two gentlemen that are on stage, but I will let them do that. But I do want to say this. If there was a Mount Rushmore of the folks that I was talking about as far as crypto and wealth management, these two gentlemen would be on it. They received my highest endorsement. I think the world of them as superhuman beings, but more importantly, very, 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 very experienced and knowledgeable in the space. So if you have questions, do ask them. I promise you, their knowledge base and their experience of actively working with clients who own it is second to none. So with that, I want to introduce Adam first. You can introduce yourself to the people, and then we'll go from there.
All right. Hey, are we on? Okay. My name's Adam Blumberg. I got into this space because I was a financial advisor, had my own firm in Texas for 12, 13 years, and went down the proverbial crypto rabbit hole and decided I wanted to actually teach it more than I wanted to actually help clients invest in it. So since about 2020, I have been focused on my company Interaxis actually teaching crypto, blockchain, Bitcoin to financial advisors. Now, in addition to my company Interaxis, also with a company called Bespoke Group, where we are a multi-family office focusing on advanced planning for crypto wealthy.
Yeah, I think Adam has been a mentor of mine, so I want to give credit to him. He's taught me a lot that I know. My name is Jackson Wood. I'm a portfolio manager. My firm is called Freedom Day Solutions. We are an SEC-registered RIA based out of Houston. I escaped Houston to the mountains of Idaho. I've actually been in crypto longer than I've been in traditional finance. So I first found out about Bitcoin as an undergrad student at BYU. I was an economics student, and reading Satoshi's white paper in 2012, it just clicked in my mind. And the unfortunate thing about that point was that I was a broke college student. So I put what money I did have into Bitcoin. Seeing the ecosystem evolve from where it was then to where it is now has been astonishing. I first purchased Bitcoin by going to Walmart and sending a MoneyGram through ZipZap. And then somehow the money got from ZipZap to BitInstant, and then it got credited to my Mt. Gox account. So the fact that now I can advise on this and see it inside of client portfolios that we manage, and hopefully in portfolios that they manage at some point as well, is pretty astonishing. So I've been here, and it's fun to see my two worlds collide and combine.
Awesome. So Jackson is so smart and successful. He speaks very lightly. So you need to talk into that mic, my man, so they can hear you. Soft-spoken.
I can hear me. I'll talk.
So a couple of things. I still got to get my steps in. So if you do have a question, I will walk out there and meet you. So if you do have a question, raise your hand, and we'll get Jackson to talk and speak up because you guys need to hear. So let's start with this as the first question and piggybacking off of my talk. You've done it. Thousands, tens of thousands of advisors you've probably coached. What are some of the major pain points that you hear? And then Jackson, a question for you. Talk about some of the existing pain points you have in your practice, and then we can go from there.
All right. First and foremost, as you've talked about already, reporting, integration. How does a financial advisor who is managing, hundreds of millions of dollars in client assets easily and seamlessly move a small allocation into crypto without having to blow everything up, without having to go to a different custodian? That's a problem, right? So custody is an issue. And then on top of custody, that opens up this whole Pandora's box of billing, of reporting, and the realization from the crypto side, the crypto room, which is where we are, that just because this is, quote, the greatest performing asset class of all time, whatever, doesn't mean that it's a shoe-in for financial advisors to put into client accounts. There are still so many other issues. Financial advisors have so much regulation, so much liability. Insurance, E&O insurance is a big problem for financial advisors that are trying to put crypto into portfolios or have clients that want it. So
explain the E&O for the people. I think this is a free jewel. Feel free to pick it up, put it in your pocket.
Errors and omissions insurance, all financial advisors have to have it. And really it's for things like I made a trade for you in your account and I fat fingered it. And instead of trading, instead of buying you 10 shares of NVIDIA, I bought you 100. And now we have to reconcile this and you can sue me and my insurance is going to cover that. E&O insurance mostly is not covering, just the blanket policies are not covering crypto, not covering any sort of crypto advice because they deem that there's too much risk there. They haven't gone into enough detail understanding custody. They haven't gone into enough detail understanding valuation. And therefore, they're just going to go, look, if you're going to go into this, we're going to charge you an arm and a leg if we're even going to allow you to do it, and we're going to cover it. So the E&O insurance is a problem because for financial advisors, job number one is not accumulating assets and running up their fees. Job number one is don't go to jail, right? Like you get really far as an RIA by not going to jail.
Yes. Don't get sued.
Don't get sued. Don't, lose all your money because you had to fight a case, anything like that. So if you can't get covered for it, if there's not an easy way around compliance and such, then a lot of financial advisors are just not going to touch it because the gains that you've already seen in Bitcoin aren't necessarily going to be there again. So is it worth it to go through the trouble to take on the compliance risk and the liability risk for a 2% allocation, right? And then going all the other issues we talked about, custody, integration of reporting, integration of billing. So now I'll let Jackson talk.
Yeah. So one quick question, Tyrone. You said the advisor community controls $128 trillion of client money.
Yes, sir.
I heard another presentation from one of the guys from Ernst & Young and talk about Bitcoin potentially reaching the market cap of gold at 15 trillion, right? So we all can do the math of what this turns Bitcoin's price to if we can figure out a way for advisors to make a 1 or 2% allocation, right? And so I think as, a raging Bitcoin bull, we all want this to happen. The biggest issue that we run into is unless you're a trailblazer in terms of the firm and you're willing to go through all of the legal challenges, updating your disclosures, having conversations with all of your individual clients, vetting your technology stack, making sure the security on that technology is up to par, you cannot participate in this industry. And so we decided as our firm to take that risk. And, we're an SEC registered investment advisory firm. Tyrone mentioned that, if you're SEC registered, you manage more than $115 million. We're significantly bigger than that. We decided that would put a bit of a target on our back, but we were going to do it anyways. And so we became one of the first firms to blaze that path and get this done. And we've got excellent partners in this. We partnered with Fidelity Investments and a lot of other technology platforms, and they've been amazing. But that's the problem that advisors run into is unless you're willing to devote the significant capital and time and paint a target on your back to blaze into this industry built upon your bull thesis of Bitcoin or crypto, it may not be worth it. And so fortunately, we decided to do that as a firm. We're very grateful and happy that went through well, and the target didn't end up being a good, that big of a target. We have an awesome compliance officer. But that's really the biggest obstacle that this industry that we represent faces, getting fully involved with this industry that's here. And so that's kind of how I see it.
Yeah, and just from my seat, right? So our firm is at 401 Financials, what they call non-discretion AUM. So we don't push the button. We don't trade on behalf of our clients. We are truly advice only, and we don't have a custodian. I am a big believer in a non-custodial future. I believe in self-custody. We self-custody our assets. We believe in moving clients on chain. We have risk and fundamentals. We've scored the top 300 crypto assets. We have our own portfolios and can't do nothing with them. Nothing. We don't even have our clients in them. We have our own money in it at Coinbase, right? But we can't introduce it to clients yet for multiple reasons and again, my firm is a lot younger than Jackson's, right? We launched 401 2 years ago because I believe that the future of wealth management and asset management is on-chain and non-custodial, and there's a slow path to that. So basically, we wanted to build the foundation to allow any advisor to tap into what we built, but also when a regulator comes in, because they're going to say, look, and I'll give you a real-life example. Hand to the sky. If I'm lying, I'm dying. This morning, before I came here, I had a conversation. I can't say what was disclosed. They told me not to, but I had a conversation with the CCO, Chief Compliance Officer, of the biggest RIA in the United States of America. The biggest. The reason why they won't let their advisors do anything around this is very specific to research, to data, to insights and information. The biggest RIA in the United States of America. And he looked at me and didn't flinch. We don't trust our advisors to get research or information on their own. We don't provide it. So because of that, they can't open their mouth to our clients. By the way, the biggest lie this space has been told with the ETFs being available is that advisors are out there pulling back the slingshot, looking at their book of business and letting it fly. That is a lie. That trade for a Bitcoin ETF or an Ethereum ETF, God bless the Ethereum ETF, suck and win right now, but any of those ETFs, that is a unsolicited trade. The client has to ask, hey, I want it. And the advisor goes, hold on, there's 500 pages of disclosures you got to sign for us to be able to do this, and we can only buy so much. So to add on what Jackson was saying, even in our two examples, we couldn't be more diametrically opposed. We're still trying to get crypto into the space, but the same hurdles and barriers remain. And think about all of the money that has been invested in crypto, and then the space screams. Advisors and wealth management firms, I use this example a lot, where someone is screaming at you that they're thirsty and the water's behind them, and you're just trying to tell them, like, just turn around. Like, right? So the whole point of this talk is to hopefully get across to the other side that wants to come over to our side is there's very simple things that we need. Statement generation, right? Account opening. Give me a real life example. I'll ask the next question. Right now, and Jackson will attest to this. If a financial advisor right now wants to open an account for a client in your portfolio management software, you go in, you open that account, and eventually you're kicked to the custodian to finish that, whether it's Fidelity or Schwab or whatever else. That's a pain in the butt. So just imagine right now, if you have a client that owns crypto, everything that you have to go through to open an account or manage the money, it's manual. Advisors don't want to live in a manual world, which leads me to this question. You have these wonderful Friday talks, right, that you should plug now and everyone should sign up for. Wonderful Friday talks where advisors get together and we just kick it. What have you learned from, and again, you were sitting in the seat as well, but what have you learned as far as what advisors are missing? Let's go there. What are advisors missing that you think could be taken to make it a little bit easier?
Sorry, so the question is, what are the advisors not getting
right
that
they could start to do and implement to kind of make it easier to get over the hump here? From all the ranting and raving that you heard on those calls.
I think one thing the advisors are missing is, well, we said the advisors are missing the easy on and off.
Yep.
I think shockingly, a good number of advisors really don't understand the value. Like, I don't think they understand how to talk to their clients and how to put it in portfolios. And the reason why I say that is because, and you know, you have to excuse this, but most advisors, or a lot of advisors that would be interested in crypto at all, right? It kind of skews a little younger, have not ever been in a situation in the economy where the S&P doesn't go up and to the right in a pretty violent way, right? Up and to the right for the last 15 years. So I think a good portion of it is, why do we need Bitcoin? Like, why do I need an inflation hedge when we haven't seen inflation since 2004 or something? Why do I need, Ethereum doesn't really have a whole lot built on it. Why do I need to help my clients invest in this? How do I allocate a portfolio? For the last 15 years, it's been very much about just accumulate assets, because everyone has the same performance. And I think we're starting to get into that point, and I apologize if this doesn't really answer the question.
It does. Absolutely.
But we're starting to get to that point where there's so many options to invest in. There's so much going on in the world. We might not see up and to the right as much. We all know how dangerous it is that the entire S&P growth is based on 4 or 5 different companies right now, and that's it. Like, we all see that, and those of us in this room see that. I think most advisors still, believe it or not, don't see that. They don't see, like, their thought is, oh, well, the government will still fix it. The government will still fix inflation. Interest rates will come back down. We'll keep going up and to the right. I'll just put my clients in S&P ETFs and call it a day and just keep accumulating. I think there are many more options now. I think we're starting to see clients aging. We're getting to that point where more clients are going to be retired than clients that are working, and you're going to have to start taking money out of their accounts. How are you going to start actually giving them income? Well, we for the last 15 years haven't had a lot of ways to generate income. So where does crypto fit in the overall portfolio planning and management realm? I think that's what a lot of advisors are missing. That they don't know how to talk to clients about that, right? Like, they don't know how to talk about income generating portfolios, because for so long, the income portion of a 70-30 portfolio was basically cash. You kept it in cash so you didn't lose it. It wasn't actually generating income. And now we have the ability to generate income. Now we not only do we have crypto, but now you have things that younger clients want to invest in, like art, right? Or the big thing that, in the crypto world is like, maybe one day we'll get to invest in music royalties or something like that. But there are new types of investments coming out. Eventually, private equity is going to come downstream. Hedge funds are going to come downstream. All these things that people want to get invested in. And I don't think advisors understand how to talk about those, because for the last 15 years, it's been throw it in the S&P and it goes up and to the right.
You want to say tokenization, don't you? Don't do it.
To add to that real quick, so even if this, house of cards and kind of inflation hedge and global money thesis of Bitcoin doesn't play out because the house of cards doesn't come crumbling down, Tyrone actually introduced me to this data back in 2017. What does a 5% allocation to Bitcoin do for a standard 60-40 portfolio with very disciplined rebalancing, right? It's amazing what that can do. So advisors need to understand that there are lots of different ways that this can be integrated into a portfolio for the benefit of the client. And if perhaps the house of cards does come down and it's the end of fiat currency and that whole Bitcoin thesis that I fell in love with in 2012 after studying Argentinian economics, that's great too. But in the event that things continue as normal, maybe I'm just a permanent optimist here, it can add tremendous value to the portfolio. And then, not to segue this or steal the show, Tyrone, but one thing you did mention was estate planning.
Yeah, I was going there next.
With our clients, estate planning has been one of the most, one of the topics that they are the most interested in hiring us for. So the best example I have is a personal one. On my anniversary in 2017, I found a dollar bill that I had written my private key on that was signed by Ron Paul. And I found it, and I realized it belonged to my old Electrum wallet that I bought some Bitcoin on in like 2013 or something. And so I blew off reservations with my wife to go to dinner because I was frantically trying to type in the letters and figure out if that S was a 5 or whatever. And I sat there, I loaded the coins into my wallet, sent them over to Coinbase. It was great. But the thing that I realized at that point is, if I can't do this, and I've been involved in that at that point for 5 years, how in the world is my wife or my kids going to figure this out? And so the advisor can step in if they are custodying the assets with one of their custodians, or if they're simply advising this off-chain in a custodied wallet or something. The advisor can come in with all of their knowledge. If I were to pass away, there's an immediate step up in the cost basis where my wife can capture those gains and not pay a huge tax. If it's held inside of a retirement account, there's beneficiary IRA rules that have to come into play for the beneficiaries. There are all types of value adds that the advisor can give to these families and the partners that they work for. And that's a big value that the advisor community brings. And so regardless of how it's structured and custodied, the advisor needs to be into these conversations and understand these allocations so that the families that they work for and your family that you're trying to build wealth for and protect multiple generations can make the most accurate and up-to-date, decision at that point. So I think that's an important thing to talk about.
Can I jump in there real quick?
No,
We talked about
this is your stage.
No,
Do it.
because this brought something that we talked about in our Friday call a few weeks ago. One of the best value adds that an advisor can have is helping their clients to not get scammed.
Yep.
Because individuals, they see crypto, they've seen the growth that's happened, and If they're doing it on their own, it's usually, I mean, this is stereotypical, right? But it's usually the guy not telling his wife, putting money into crypto, and he's trying to get the 1000x, right? Because he wants to tell the wife in a week, hey, guess where we're going? Like, we're going to Paris, pack your bag, I'm going to go on a shopping spree because I went 1000x on this token. I put $1,000 in and now we're millionaires, right? 99.999 times out of 100, that's going to be some sort of scam, exploit, hack. They're not going to get it right.
Yep.
And hopefully it's only $1,000. We've seen cases that is 6-7 figures that people get scammed. If the advisor is not understanding enough to go, if you want to get in crypto, let's talk about why. Let's talk about where it fits in your portfolio. If you do want to take some speculative use case or speculative token, let's do it with a really tiny percentage. But the rest of it, let's talk about where Bitcoin fits and let's talk about where ETH fits, such that you don't go doing it behind my back, doing it behind your family's back, because that's going to lead to a lot more problems.
Right. And this is, again, I'm an on-chain junkie. So I think account abstraction, there's a lot of possibility there to just literally program all of this so advisors don't have to worry about it. But here's the thing. There's all this talk of social recovery with embedded wallets and everything else. You want to know what social recovery is in our world? Beneficiaries, right? Like, you log into an account and you have beneficiaries. That's social recovery. Now, could it get better? Yes. And that is one example where crypto could make our space better. That is a real use case. The biggest opportunity, and I should yell it so everyone over there can hear it too. The biggest opportunity in the wealth management crypto space right now is around estate planning. If you are a builder and you hear what I am saying, leave here right now, get your friend, go to your mother's basement and start coding an estate planning solution for financial advisors, right? A16Z crypto will be right around the corner. They will chase you down for that. It remains the biggest opportunity in this space. A couple years ago when I was building my last company, I met with two founders, brilliant. They built an awesome estate planning solution. I offered to help them to make intros. They came back to me 2 months later and said, no one will fund it. As I stand here right now, I promise you the biggest piece of media that Coinbase will ever have, and it's coming, will be a family fighting over the assets that are there, and it's going to go all the way to the Supreme Court. I promise. It's going to happen. It's the easiest way to add value for us right now. To simply say, okay, you own it. Let's find where it is. Let's secure it, right? Who besides you knows what a Shiba Inu is, right? There's digital estate planning, which you can talk about and all those other things. It is the biggest opportunity in our space. Advisors preserve wealth. Fine, you've made 10 million in crypto. It went to the moon, whatever it is. But now what, right? How do you preserve it? How do you protect it? How do you protect your family? What are the tax implications? How do you transfer it to someone else? I don't want to walk around with this thing in my pocket, right? I don't want it on my phone. I remember years ago, this was probably 2016 or so, actually had a client who worked for CoinDesk. Young, had a bunch of crypto, helped him move it to a wallet, and he's like, well, now what do I do? Put it in a safety deposit box? It's like Back to the Future, right? So this still persists in this day. So anyway, I know you do this every day from the estate planning side, right? But the last thing I'll say is this. On that, you have 110 million accounts at Coinbase. You got another 30 million or so at Robinhood. You add up all of the accounts that are everywhere, including the ones that we can't see on chain. Folks that have different wallets. I just use this wallet to sign. I just use this wallet to trade. All of these different things. Again, integration is the innovation to be able to see it. So imagine if advisors just said, look, I'm going to help you move it from your right pocket to your left pocket safely to preserve it for you and your family. In the event something happens, by the way, you've got this NFTs, you're getting royalties. By the way, there's a smart contract that says little Johnny starts to get $5,000 of Bitcoin every Tuesday in August for the rest of his life. What is that worth to a $128 trillion space? It's mind-numbing that we're funding the next NFT project. It's useless. But everything is use case, And estate planning, which again, very lucrative, and you can spend the last 3 minutes talking about that. In the traditional world is highly lucrative. Imagine what it would be in crypto with all the right tools and resources. Scream.
No, I think one of the biggest things that, like, if we were to sum up everything that we're talking about, it's the fact that you have crypto, you have these decentralized databases, decentralized ledgers, which obviously have, implications on the world, implications on how we see data, how we manage, own, move assets around the world. But we still live in this world of laws and rules that is relatively analog. We know that many of the custodians we use still actually use faxes and still require faxes. So the rules and the entire system are not going to change overnight. It doesn't matter how much you scream about decentralization and best performing asset class of all time and all those things. We're not going to take the traditional financial system and the traditional legal system and move them all over to smart contracts and decentralized chains overnight. It's going to have to be a coming together. And unfortunately, as we've seen, it's going to have to be more of a crypto moving toward the TradFi world, because that's where the money is.
Bingo.
That's where the $100 and whatever trillion is. If you want to bring over that a little bit at a time, you just have to play nice for a little while, get people used to it. And like I say all the time, once they see what it's like to have assets on chain, once they see what the transparency of the BUIDL fund is like, the liquidity of a fund like that, once they see what it's like to have Bitcoin when, the proverbial shit hits the fan somewhere in the world, then they're not going to go back. But you have to bring it into the traditional world with the rules and regulations and laws that we live with right now. And obviously a big part of that is estate planning. What happens with taxes? What happens with asset protection? Your self-custodied wallet does not save you from liability. If you get sued, that's your assets. If you die, those are your assets. It doesn't matter if it's in a multi-sig wallet. A multi-sig wallet is not an estate plan.
Thank you. That's the conversation I was having on the way here. Oh, I have inheritance at this and that or whatever, and it's 3 of 5. What does that mean to me as an actual licensed financial advisor? Yeah. Nothing. It's not real.
We talk all the time, right? Everyone in this room knows the U.S. government has a bit of a debt problem, and they're going to get your money if they can. And again, a multi-sig wallet doesn't solve that.
All right, we're steaming to a close here with 12, 11, 10. I highly suggest this. Again, every single time I am asked with anything to do with financial advisors and wealth management, Jackson is the first name I mention. Get to know him, talk to him. Anything around advisor education and crypto in general, there is no one better than the entire country than this gentleman. And if you need somebody to just scream and talk real loud about what financial advisors need, I'm your guy. Thank you, guys. Appreciate you.